Candlestick patterns. I know what you're thinking. They never work and they're a waste of time. You might think that because most traders enter blindly after seeing these patterns without the right context. You see, these patterns should be used as confirmation, not as a reason to enter a trade. In this video, we're going to cover the top 3 reversal patterns that actually work so that you can improve your trading. One of my favorite candlestick patterns is the hammer. The hammer is a bullish reversal pattern that forms after a price decline. You can identify them by their small bodies, long lower wicks, and little to no upper wick. The long lower wick indicates that sellers have pushed the price down significantly, but buyers have regained control and driven the price back near its opening. This lower wick should be at least double the size of the candle body. When you see the hammer candle paint, along with other confluence, you may be sitting on a good trade. Equally valuable is the opposite of the hammer, what is called a shooting star. The shooting star is a bearish candlestick pattern that can form after a price advance. It has a long upper wick and little to no lower wick. And make sure that the candle body is small, making the upper wick about twice the size of the candle body. Here's a quick example on how you might use this to enter a trade. First, identify a key level of resistance. Over here, we have an old level of support as price bounced off of it multiple times. After the market broke through, we now look for it to become resistance. So here we can see that the market has already tested this level and then went down lower. There was no opportunity to enter based on a candlestick pattern alone. But as we wait a little longer, we can see that eventually it does come back up to take out that high. This has created a shooting star, after which the market traded back down, breaking the local swing low. Now, this is a hint that there's bearish price action, and it's very likely to continue lower. We can look to enter here on the fair value gap, setting our stop at the high while we target the levels lower. Remember, don't take a trade just because you see this candle. You need to have real context behind it, or else these don't work. So on this chart, we have a clear level of support. Price has reacted from this level multiple times. We can also see that it's made a higher high, as this candle is closed above the previous swing high. So in this case, the market should be bullish, so we may look for continuation. First, as always, we're going to have to wait for the market to retrace back to our support level. And once it reaches it, we're going to be looking for that hammer candle to form. Once you've identified it, look for it to paint a new green bullish candle. We can look to enter at the close of this candle with our stop set below and our take profits aimed higher. Another powerful candlestick pattern is the engulfing pattern. A bullish engulfing pattern consists of just 2 candlesticks. First candle will be marked by a small bearish candlestick, where price has moved lower, followed by a larger bullish candlestick that completely engulfs the previous candle's body from low to high. It's important to know that you only need it to cover the candlestick body. You don't need it to cover the wicks, so keep that in mind. This pattern indicates strong buying pressure, as the second candle's bullish momentum overtakes that previous bearish push to the downside. And of course, the bearish engulfing candlestick is just the opposite. It also consists of 2 candlesticks, but the first one should be a small green move to the upside, followed by a larger bearish candlestick that completely covers the previous candle's body. This pattern indicates strong selling pressure, as the second candle's bearish momentum overtakes the previous bullish sentiment. Here on our chart, we can see a clear level of resistance. Price rallied to this point, but failed to push higher multiple times, and eventually it reversed to the downside. Now, you want the market to come back to this level and wait for a confirming reaction. Here it pushed slightly above that level and it took out the equal highs. It then broke to the downside and created a new lower low. This is our first sign of bearish price action, so we should get ready to take a short. Finally, it's retested the resistance level one more time, and here we can see it creating a clear bearish engulfing candlestick, with the second candle completely covering the previous candle's open and close levels. Now that we have the right conditions, we can enter a short position. Logically, we'll set our stop above our local high, and we can target support levels lower to take profit. On the flip side, for a bullish engulfing candlestick, you'll notice that the market here is uptrending, as it's making higher highs and higher lows. So we want to look for a long opportunity. As always, we'll mark out our levels of local support first. Looking to the left, we have these highs that have acted as resistance in the past. Since price has broken through this level, that has now become support. For additional confluence, you can use something like your fib tool. You'll notice here that our support level lines up with the 0.5 Fibonacci retracement. So all we have to do now is wait for price to come to us. You'll want to enter only when it prints out a bullish engulfing candlestick. So here we have our bearish candle, and as you can see, the next candle opens and closes higher than the previous, completely covering the body of the candle before it. We can look to enter a long position after the confirmation, and again, setting our stop just below and targeting our resistance levels higher. The last most powerful reversal pattern we're going to talk about are the morning star and the evening star. Let's start with the morning star. This is a bullish reversal pattern consisting of just 3 candles. The first, a long bearish candle, then a small bodied candle, which doesn't have to necessarily be red or green. However, the third must be a big green bullish candle. The middle candle of the morning star captures a moment of market indecision where the bears begin to give way to the bulls. The third candle confirms the reversal and can mark a new uptrend. The third candle body should be at least half the size or bigger than the first candle. If you're wondering how might I trade this morning star, take a look. Here we have an uptrending market that's consistently hitting higher highs and higher lows. We can see how the market has broken through these highs, which were previously acting as resistance. But now this area has been flipped to support. As always, use your other tools for confluence. I personally love the fib. That's why we keep using them in these examples. As price is moving down, we've established a local downtrend. However, this could also just be a retracement, and price is actually looking to move higher. But we can never know for certain. And that's why we have to wait for the morning star pattern to completely form before looking to take a trade. Here we do have the pattern confirmed, with the third candle body bringing in that bullish momentum. We can enter at the close of the third candle, setting our stop at the recent low and targeting our resistance levels higher. Last, we have the evening star. This is the opposite pattern to the morning star. It's really easy to remember. It's a bearish reversal pattern consisting of just 3 candles. The first, a long bullish candle. Then again, a small bodied candle of either bullish or bearish. And finally, a long bearish candle. Look here, we have an uptrending market, and to the left, you can notice that this high has been untouched. So there's likely liquidity resting here. As price reaches this high, wait for the candlestick formation to paint. This is a hint that it's looking to reverse from here after the liquidity has been swept. We can enter at the third candle close and set our stop above while targeting our levels lower. Basically, candlesticks are a tool just like anything else. They aren't going to be a magic bullet. You're not going to all of a sudden win every trade you take, but they're a valuable addition to any trader's tool belt. That brings us to the end of the video, boys. Hopefully, I explained this well enough for everyone. If you enjoyed this video, I recommend you go check out the rest of our free trading course playlist. If you know a trader that might benefit from this video, please share it with them. And last, smash that like button and leave a comment. Let us know how you feel about candlesticks and what topics you'd like us to cover next.